All right, so diving into the live stream today, we're going to look at not only the mining scenarios that are playing out within the market, how that affects Bitcoin, how this affects crypto, and even Web3 markets to a certain extent. We'll dive into a bunch of this stuff today. I think you guys are going to like this one. My name is Paul Barron. Welcome back into Tech Path. Before we get started and welcoming in our guest today, I want to thank our sponsor, and that is Ledger. If you guys are looking at any kind of storage of your digital assets, this is the route to take. I always use, when you think about self-custody in general, a lot of people are trying to maybe get into it for the first time. And this is something that we talk about a lot here on the show, but this is probably the best tool that at least I've used that makes it very easy for someone that is not normally, even though I'm somewhat aware of it, but I teach people all the time how to use this. And people get it very quickly. So don't think that this is too much tech for you. Make sure and check out Ledger. Get one of their devices. You can, of course, order the stacks now, coming to you soon. And then they also have the Nano X, the Nano S Plus as well. So check out any of these devices, priced for pretty much any budget out there. Use our link below to kind of help the channel out. All right, so let's get into it today. And of course, our mining expert that we always bring on the show is Miss Sue Ennis from Hut 8. Great to have you.
Hi, guys. Really happy to be back. Lots to get into today.
Yeah, for sure. You guys have been busy since our last discussion. But before we get started on some of the Hut 8 news, I want to talk to you a little bit about just kind of the roster of things that are happening from a macro, market stance, but also some of the scenarios that are starting to play out. This is just a thread over here from the Kobeisi. We've got Fed Chair coming in, for the first time since February 7th. January CPI was above expectations. I'll zoom up on that for you a little bit so people can see that. Jan PPI above expectations. The CPE rising for the first time since October. And then now we're getting revised a higher CPI as well. So is he setting the stage for potentially a 50 basis points? When you look at this right now, obviously you guys are watching this. It has so much impact on the price of Bitcoin and, in essence, what you guys are doing there at Hut 8. What are your thoughts on some of the key macro impacts right now?
Yeah, so I think we're in a really interesting, unprecedented time because obviously right now what we see is the CPI and PPI have come in higher than expected, but we also have this unprecedented number of people who left the workforce during COVID and retired. So you have an incredible amount of demand for positions to be filled, which obviously,
Right.
Creates demand for U.S. dollars. We also have a unique situation where we're now repatriating a lot of the supply chains back to North America and a tremendous amount of investment in chips, renewable infrastructure in general. And also it looks as though the U.S. debt to GDP, some figures I was reading, has actually gone down from 106% to, I believe it's 84%. So, but again, we've got that CPI and PPI are still, higher, surprise on the upside. So I do personally think that we probably will see one more rate hike. But again, remains to be seen. And it's a really tough job, I think, to be Jerome right now because there's so many unprecedented sort of nuances that he's got to balance. But I do think we are going to see another rate hike.
Yeah, March is going to be an interesting month just because of the scenario that's been playing out with Silvergate, obviously the macro effect that is also coming in, and markets in general. I mean, you think of it, I was just reading some data this morning, back to your point on jobs, it's like 2 jobs for every unemployed person in America right now. So the potential of those job numbers slowing down may not be a realistic scenario for the Fed for months to come. The question is how far into that. Many people have kind of hovered around this 3 to 4% inflation that could be kind of the new landing zone. Not that that will be the one acceptable by the Fed, but it could be an area where markets have been able to deal with that somewhat high interest rates, a 3 to 4% inflation with those kinds of market conditions. So, I mean, you guys obviously have to look at these things of what effect does that have on mining in general, obviously holding your Bitcoin assets. You guys have been one of the few that have been very stodgy on holding out those Bitcoin assets. How do you see that playing out if we have that kind of market condition?
Yeah, well, I think certainly, rising rates and a risk-off appetite is not good for Bitcoin assets, but this is where we do focus on the strength of our operations because we do have a completely diversified business, like we are in the high-performance computing, traditional vanilla data center space. And if you look about how that segment, that industry has performed relative to the digital asset industry, sort of regardless of where interest rates are, it's been pretty steady Eddie. And that was part of the reason, that was part of the thing that we really liked about this business was that it gives us a sort of smooths out some of the volatility that comes with risk assets like Bitcoin and Bitcoin mining. But again, remains to be seen. We're still very bullish though on, Bitcoin mining and also uncorrelated data center infrastructure businesses.
Yeah. With that being the case, you add in one more scenario playing into this, the Silvergate issue. Some people are looking at this bank probably not going to make it through the month of March in terms of solvency being around. There's a handful. I mean, there's been some stories out here on the block. This was one just talking about short sellers predicting the bank's demise within a week. I think that may or may not. I don't know. I see the amount of dissidence that seems to be out there. And then you've got scenarios playing into this where you've got MicroStrategy confirming exposure with Silvergate. This was actually the tweet right here, but it wasn't really a major thing. This is a loan from Silvergate that's not due. I'm not sure how this is going to flow into the markets when their position may not necessarily be at risk, even if under insolvency or bankruptcy is based on what they stated. But how do you think this may affect further? We saw a liquidity event happen late last week. Do you think we'll see other scenarios playing into that on Bitcoin's price?
So I think what's going to be interesting is the effect on the stablecoin, the particular stablecoin piece of this industry, because Signature and Silvergate are two of the only sort of 24/7 minters and redeemers of stablecoins. So again, if we don't have a Silvergate and Signature has already publicly come out and said that they're reducing their exposure to crypto, stablecoins may have to go the route of the old-fashioned way, aka bank wires, aka if I'm a massive USBT or USDC holder and I want to make a redemption on Friday, I might not get that till Monday or Tuesday. So I do think we will see probably a little bit of volatility here. I think it's also a tremendous opportunity, for the SEBA banks out of the EU for potentially to offer a stablecoin on and off ramps. I mean, who knows what Coinbase has cooking up on the back end. We already saw that they came out with Base. Obviously, that was more focused on the dev side of things, but maybe they will try and step in as that on and off ramp for stablecoins and redemption and minting. But yeah, it's going to be wild. I think with respect to MicroStrategy, though, lest we forget, MicroStrategy has a dual strategy of being an operating company and then obviously a modestly leveraged investment play into digital assets. And in Q4, their cloud business grew, their business intelligence business grew. They are one of the leaders in business intelligence for government and enterprise. So I think that they've got a few more levers they can pull if in fact they do get into a bit of a snafu with this Silvergate becoming potentially insolvent. But I don't think it's going to be I think we forget that MicroStrategy has a completely uncorrelated other line business. Well, and they had a pretty decent quarter in Q4. So that line of business is certainly up and thriving and going well. So I don't think we're going to see as much of hairy canaries with MicroStrategy.
Yeah. Well, it's like, we were kind of talking about this within the research team, and I was looking at the data and back to the points that you were making around MicroStrategy as an alternative. Think of it in multiple lines of fishing in the water, and you've got MicroStrategy doing those kinds of things pretty much all the time. Obviously, Saylor is a big proponent of Bitcoin. He really speaks out on that, but I think people are missing the point here is that this isn't the only scenario, and the exposure, though it is moderate, it's not a major scenario. People, I think, are just going to go about their business. What does concern me, though, is, back to your point, is the ability for stablecoins to be able to transact. And that will play into this a lot. You had the, Coinbase suspending Silvergate payments, SEC saying this is not safe right now, Crypto.com is suspending Silvergate payments. Obviously, we already saw some of the other things that happened out there. But you also had Bybit. This was an interesting thing over the weekend, is they discontinued US dollar transfers by a certain date in March, both in and out. So that was another major scenario. Obviously, some of that's probably coming from SEC pressures. How do you think this plays out, Sue, when you see a little bit of a ramped up effort here, both from a banking infrastructure, a regulatory infrastructure, at least in the United States? I know you're Canadian based, but here in the US, do you see more of this offshoring and for the US investors to kind of have to go around the corner to be able to participate in this market?
I do, unfortunately, because as long as we're continuing to apply the Howey test, which was, I believe, created in 1940, so it's an analog regulatory rules that apply to analog systems. As long as we have these archaic frameworks to assess whether or not a digital asset is a security or not, I think we will start to see more offshoring. It has been nice to see in February, Gensler did quite publicly explicitly say that Bitcoin was not a security, although everything else pretty much is up for grabs and potentially. So I think certainly without any tangible sort of frameworks that investors can at least use as guideposts and goalposts, it does somewhat create an exodus to countries that have provided more guidance and assurance.
Yeah. This gets into the scenario that I talk about often, which is this innovative downturn that the U.S. may be facing, where we've had kind of that market edge for many, many years, multiple decades, and now we may be playing into a hand where we don't necessarily have that. Granted, I don't want to get into AI, but I know Silicon Valley is, all in. We're seeing a lot of that. But when you look at Web3 and or blockchain in general, we're seeing that start to really populate, mostly in Asia. So definitely one that we're watching for sure. I want to jump over into the miners net flow volume. This was the 7-day average, just reached a one month low. All right. And then the previous month low as well was observed. This was back also in March. And if you look at these numbers, I mean, what does this mean to us, when us normies out here that are looking at the miner flow here? You guys, how is net flow working for HUD 8?
Yeah, so I think if we zoom out just a little bit, we look at this first quarter of 2023 has actually been pretty good, relatively speaking, for the miner equity space. So we are starting to see capital flow back into the industry, which has been great. If you look at some of the public miner indices, so these are indices that include manufacturers, miners, foundries, those indices are actually up on average about 52% relative to the price of Bitcoin, which is at about 44%. And also there's a couple of our competitors. So for example, the Greenidges, the Wolf, SDIG, who previously stated that they were concerned about cash flow, but they actually were able to restructure their debt. So really fundamentally, these are all actually pretty bullish indicators to sort of the health of the miner equity ecosystem is starting to recover. And that we do think a lot of the pain that we saw in 2022 has happened. I think that things are starting to move in the right direction, and that we still certainly need a little bit more time, but things are definitely picking up.
Okay, so this was a statement. Bitcoin hash rate pushes to new all-time highs. Many would look at this as an estimate to the operational ASIC rigs, basically the equipment required to generate that hash power. How does that equate to cost for HUD 8? Because obviously you guys, being a publicly traded company, cost of equipment and operations are one of the key balance sheet elements that really drive out your reports. What does this mean to you guys when you see a hash rate going to all-time highs?
Well, another thing that really matters is the price of your energy, right? So we have certainly seen, so we are grid connected at 2 of our sites in Alberta, one in Medicine Hat and one in Drumheller, Alberta. And so we have seen energy prices come down, which is great because that's the number 2 input to your business. Right. So when energy prices come back down, your margins obviously improve. I think also though, and we've talked about this on the show before, the importance of how you've managed your balance sheet throughout the bull and bear market cycle. So right now, for example, we see hash hitting all-time high. Energy prices have come down, but still Bitcoin itself is still trading within that 21 to 24K range, right? So your margins are still compressed. So then when you look out, sort of take a macro view into your business, you also have to look at things like, okay, or if you're looking at a miner, what price did they pay for that equipment that they're using to hash? Because in the bull
Right.
market, we see prices at $90 to $120 per hash rate, and we're now seeing anywhere from $8 to $20 per terahash. So versus $90 to $120 per terahash in the bull market. So then when you're looking at your miner's balance sheet, you need to say, okay, like, what are the future impairment charges that we're going to see on the value of some of these assets? So those are all factors you need to take into consideration. But again, if you've got good equipment, if you've got cheap energy, then hash rate rising is not a terrible for your business, especially if we see Bitcoin too. So
yeah, and I think your point there to energy, that really is kind of the lifeblood of the long-term effect, versus equipments are typically one-time expenses that will depreciate out over time, versus that energy cost, which is a constant renewable scenario and impact on your balance sheet. So if you're seeing those things decline and getting back into alignment with what we saw pre-COVID times, that I think is going to be a big factor. The other thing too is how creative you are in getting into the alternatives side of things, which is everything from flare to solar to all the variations of hydropower, etc. What would you grade HUD 8? I know you're going to give me a high score, but what would you grade HUD 8 right now in the mining community in terms of using alternatives?
Yeah, so I would certainly say that we're up there. And I should say that we are in the middle of a proposed merger with an incredible company south of the border. So I'm a little bit limited as to sort of what I can say now. But I would say that, in terms of renewables, in terms of looking at energy hedging, in terms of looking at treasury management strategy, that is all a big part of how we run our business. And obviously on top of our diversified high performance computing play. But certainly looking at increasing that mix of renewables is a big, and diversifying our energy portfolio is a big priority for us with this proposed merger with this company called USBTC south of the border. Really sort of hits a lot of those priorities for us. So it grows our pipeline of opportunities. It advances our commitment to driving improvements across all ESG and energy metrics. The deal also improves our energy expertise and hedging capabilities. They have an in-house energy and hedging team that we're incredibly excited about. They have a purpose-built platform called purpose-built platform and software layer that's focused on, how do we make sure that you're arbitraging electrons in an efficient way. So where HUD is now is good, but I think, again, in a post-merger world, if this merger does get approved, which we're hoping to in Q2, it goes from good to excellent. It would be how I feel about that.
Just for our audience, I went through, this is available over on the HUD 8 website too. You can just go over there and look at this presentation. It's pretty insightful in kind of the strategy. This is the merger that Sue is referencing. Again, HUD 8 didn't ask us to talk about this, but I'm curious all the time. But I was looking at this, just looking at the sites across North America, the market cap on what's happening with this particular merger, and you can kind of see some of the expertise areas. These guys are based here in Miami, which is, of course, our home turf. So that's good with a U.S.-based company. Lots happening here. I'm very excited about this for you guys. I think this will be interesting to watch over the evolution, because I think mining is going to be not only a critical component for the next halving, it's going to be a critical component for being able to get regulation in line so people can get away from this stigma that we have around these ESG scenarios that play out. So good luck to what you guys have going there for sure. Okay, so I want to talk about some other things here. And one of the scenarios that I want to get into is, in general, is ETH. And then you look, obviously you guys used to be a massive ETH miner. That all has changed. You've repositioned your business, going more into cloud computing, the potential of where Web3 plays into that. How is that coming for you guys right now?
Yeah, so I think it's been really interesting to see, and you talked about it, you touched on it earlier, just about some of the interesting Web3 partnerships that we're seeing in Asia. And we do think that that's going to follow suit in North America. So, for example, in China, we saw that Tencent Cloud is actually working with Elrond to build a series of Web3 payments, infrastructure, staking services. We saw Conflux Network partnering with China Telecom to build SIM cards, again, also focused in the Web3 space. So again, we love where we're positioned because we haven't made a call on sort of what Web3 app or player is going to win, but all of these, our call has effectively been on every single one of these apps, every single one of these companies is going to need high performance compute infrastructure, and we've got the infrastructure to support that. Right. Obviously, the advent of Nostr, we're very bullish as well on Lightning Network. That's another piece of Web3 technology that we're very, very excited about. And then I think if you also just look at the significance of some of these applications, when you look at, for example, what's happening in Nigeria right now. So there's massive rioting that's happening because there's effectively been a drought of dollars being put into the ATMs because the government decided that they wanted to change the currency design. And so they swapped out old banknotes for these new ones, but this has caused ATMs to dry out quickly. They're now putting government-placed limits on withdrawals. It's now causing a ton of chaos. And again, if you have infrastructure like Lightning networks that can still support people and their businesses and their ability to have financial sovereignty, if you've got obviously Bitcoin, it's really meaningful. And I feel like every day I read of a new use case and a new thing that some of these applications can solve for that legacy systems just are, don't. So.
Right. Yeah. Well, I think, to your point, if you look at what Strike's performance has been down in El Salvador, easily kind of transitioning now into possibly going into some of the Africa scenarios that play out into this. Back to your point on Lightning, all that plays into a potential for many of these emerging markets, which is another category that we've been watching for a long time. And again, it goes offshore. We're seeing this kind of movement, usually starts to set the stage for a lot of these markets that maybe aren't G20, but are emerging countries in terms of population, in terms of productivity, especially when you look at raw resources. Those also kind of play into the overall. There's a lot happening, I think, globally that could really change a lot of that. Back to the point you were hitting at is in terms of the cloud services. We showed a little bit about EV.io before, and I know this is a company that you guys have kind of connected with. A lot of advancements here in terms of their platform, which of course, will play good for you guys because this is going to be a good showcase as an example of, hey, here's what you can do with HUD 8 as an example if you're a Web3 platform. Do you find more companies going to or coming to HUD 8 like this that can start to work up, Web3 strategies with you guys?
I think in general, we are just seeing an increase in customers becoming more aware of the importance of having composable compute and access to composable compute within sort of the house that they already live in, within the infrastructure where they already transact. Because there's nothing more painful for when you're trying to render a movie or a game, or again, you're just you're a biotech business and you're trying to run a different sort of algorithm, and then having to go outside of where you normally have your computing is really quite a pain and quite cumbersome. So I do think that having the composable compute and being able to sort of flip between different iterations of compute within the HUD 8 infrastructure has certainly been an advantage, and something that I think customers are really starting to understand the importance of as we see, increased demand for AI compute, as we see, some of these major trends really catch some momentum. Even, for example, the CAGR of the cloud, of the server-based gaming industry is forecast to something like 54 to 59% growth per year for the next 5 years. And as you said, look at what EVO has been able to create and do in under a year in terms of amplifying their in-game assets and their in-game experience. This is here to stay, and we're certainly seeing more demand on our end.
Well, they even got the HUD 8 and the EVIO NFTs in game now, so that's interesting. And these were sold out like really fast too. I was looking at the list from them on Twitter, and they just showed what the inventory. Not a lot of supply. So for those of you guys that grabbed some of these these, and it was only 3 Sol. That was crazy. And what was the value on this thing? It like jumped up quite a bit for what it was. This was looking at one of the things you could actually download from it. Where was that price? Oh yeah, here it is. Yeah, 3 Sol to almost 17 Sol right now in the current price right now, and this is over on Fractal. So again, back to your point, this is big opportunities, I think, for the growth. We've been doing an analysis on gaming in general and how this might play. And if you look at the amount of gamers that are scheduled to be forecasted, to be in the, on Earth, 3.6 billion right now by 2025. That's an insane growth, up from around 3 billion. This is going to continue to really fly. And mobile gaming is going to become a huge, huge part of this business, which I think is one of the reasons that Web3 will win in the gaming sector, because I think we'll start to see such a shift into mobile devices being kind of the new gaming device. This could be huge for you guys.
I also think that investors often sort of underestimate. Even myself, I'm very guilty of sometimes taking a North American centric view when looking at an opportunity. Indonesia, Singapore, Vietnam, these are Philippines, massive populations that are actually mobile first in terms of everything that they do. And even, for example, look at South Korea, something like 33% of people in South Korea have owned digital assets since like 2015 or 2016. Like there's a tremendous amount of opportunity outside of North American mobile adoption for these new sort of apps and games. And that is something I think is really exciting in terms of the potential here as well.
I get in conversations with guys on Twitter all the time. I get dragged into these rabbit holes about that very issues. It's I look at it and I think of it, hey, listen, you can either go the way of the BlackBerry, or you can go the way of the iPhone, because that's where I see traditional gaming right now. And it's going to get into its own microcosm of its own small niche industry where mobile, continues to expand globally. And all of the great gaming developers, companies, cloud services, etc., are going to transition. So you have to go with a global community, because it's literally the dog wagging tail wagging the dog right now with what the market is doing out there for sure. So I'm looking at your website, services to drive innovation. You've got cloud data services, high performance compute. What is this? This is VFX, 3D gaming rendering, all of that. Is that where this would live?
Yeah, absolutely. That's where this would live. That's where our AI composable compute would live as well. And we're pretty excited about it.
So you mentioned AI, because this is another topic we get onto quite a bit. I look at it as being a big component of Web3 in the future. Already, we've seen massive moves into AI with OpenAI, et cetera. Already I saw a report out of Silicon Valley. There's already been 500 startups in AI, mostly in the space of, and this is kind of more of an investment scenario, mostly in the space of the voice, text, data, video, audio kind of component. I look at this and I think, wait a minute. If you go back and look at kind of the history, the winners back in the early stages of the internet were not the gold miners. It was the picks and shovel people, which are like the data centers, like you guys. How do you think that plays out with the AI invasion that we're going to see in terms of new startups? Do you think this is all bullish right now, or do you think we're going to run into kind of a bubble?
I think we're definitely, like any sort of new and nascent technology, we're going to see the same bubble burst hysteria cycle that we see with every other new technology class. I do think, though, and you and I have talked about this before, I am incredibly bullish on AI. I think it is industry agnostic. I think it is it can potentially disrupt again, it's an industry agnostic disruptor. Even if you look at how it can complement crypto in terms of helping smart contract auditing, amplifying trading algorithms, it really touches all pieces of industry. And so, yes, we look at ourselves as being in a very favorable position because we've got the infrastructure and compute to be able to support the growth of this tremendous technology. And that's the infrastructure side of things is where we feel is the safest play. Versus, again, trying to bet on the winning racehorse. We own the racetrack. So
we just invested in a new team just in the past few days, a new developer team for our own sentiment data sets to look at integrating in AI into analyzing sentiment so that you could then kind of cross-reference that against a market action, which is typically how our CPI works. I'm excited about it, but again, I'm still I'm a bit hesitant at the sense of how far this will go. How quickly will it be able to advance? Right now, I feel like we're playing with, toddler tools, so to speak, because it doesn't feel completely vetted out yet. But I'm intrigued with what the future could really hold. Last point to you: Bitcoin ordinals. Absolutely. Now we got 324,000 total inscriptions today. What does this mean to you guys? Does it affect Hut 8's strategy around Bitcoin at all? What's happening with the ordinal space?
No, it does not affect our strategy at all. I think our investors know by now we're pretty conservative, especially with things like this. We think it's a really interesting use case. Are we going to get involved personally? Probably not. Again, who TBD? I cannot.
Yeah, who knows?
That we're going to get involved, but it's certainly something that we're watching the same way that we're watching Nostr, the same way that we're very interested in Lightning. And how do we potentially look at Lightning with respect to our own treasury management strategy with our tremendous HODL on our on our balance sheet as well. These are all things that we watch, and we'll keep you updated if we actually get involved.
For sure. Just as a last note, here was the Taproot activity, which has lifted kind of adoption metric now to another all-time high, which is interesting when you look at Taproot adoption at almost 7.5% right there in terms of utilization prior. So pretty interesting use case. Mm-hmm. Love to get you guys' comments on it. Make sure and drop some comments down below and smash the like button if you like to have Sue on to break these things down. We always love having her, of course. But we always love to get you guys and the audience feedback. We're going to go to our poll real quick and see what they had to say. All right, what will institutions adopt more in 2023? Bitcoin or metaverse and NFTs? So Bitcoin, you guys are still in the driver's seat over there at Hut 8.
Yeah, I agree. I'm with your audience big time.
There you go. All right, Sue, it's been great having you on. Thanks so much for stopping in today. We appreciate it.
Okay, bye guys.
Excellent. All right, guys, if you're not in our Diamond Circle already, make sure and jump in. It's really easy, and it's one of the best places that you get the additional content. We do a Substack-only podcast over there. So all you have to do is just go to PBN3, the number 3, .substack. You'll find us over there, or click the link down below to be able to join right there from our website. We do a lot of analysis in there. You can get into kind of guided tours through the CPI. There's a lot happening in additional content. We do audio notes that are after the show. I'll probably do one for this show today. So you'll probably catch this on the email with additional context in there that is more research. Plus we put in all our stuff from the Crypto Pit as well in terms of the research that we do on each show. So it's an easy thing to do. Make sure and grab a copy of the Diamond Circle email. It's very easy to do. All right, if you want to catch me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.